Hello everyone, welcome to P.B.M. Vending. Today I want to talk about something none of us like to talk about, and that's income taxes. Why do I want to talk about income taxes? I'm going to start by telling you a story, a true story. Many years ago when I was young, I was in the banking business, and we had in this town an amusement company is what they called themselves, and this is back in the 80s, 70s and 80s. And as an employee in that bank, I knew most of the customers that came in. From this amusement company, we had two guys that would come in 2 or 3 times a week, and each time one guy would be carrying a couple of bags filled with quarters, and the other guy would have a pistol on him, bodyguard. So they came in, and this went for years. Then all of a sudden they didn't. The owner went to jail for not declaring his income tax from all the quarter machines. Now, and he's still in jail. I mean, when they get you good. And I can't remember if they got him because of witnesses. I'm pretty sure it was because his employees turned on him. But he's been in prison for, well, since the 80s for income tax evasion. Now, he had a very nice, thriving business. He was making a killing. Back then it was mostly dart machines, pool machines, video machines, and video gambling machines was most of what was around here. And then of course vending machines and that kind of stuff. And here's several lessons you can learn from that. Number one, if you're going to be that big, try to do it all by yourself. Try to be a one-man show. Because when you start dealing with all cash and somebody gets disgruntled, they may even lie on you. I mean, I don't know that guy that was in that story, I don't know if he did anything or not. I know he was convicted of it. So, try to stay a one-man operation. If you must, and you want to get that big, then you need to be scrupulously careful about recording all income and outgo. And when I say scrupulous, I mean, like 2 people count it and 2 people initial it every day. That kind of careful. Now, another thing, especially as you get started, and there's a number or a feeling or a something that when you go to do your taxes, if you only made X amount of dollars from your machines that year, the IRS probably is not going to care. If you made $200 all year from your machines, they don't want to hear from you. Okay? But if you're making $100 a month, okay, now they want to hear from you. Okay? So if you take your taxes to somebody to do, which I do, you make sure that you save every receipt from every candy purchase, from every machine purchase, from every purchase that you needed to go along with your machines. Now, there is another deduction that this coming year I'm going to use, and I'll be honest with you, I've had home businesses before, and I've always been scared to death to claim the home office because that sends a red flag up to the IRS. But I was thinking the other day, in my apartment I have like 4 or 5 rooms, and 2 of them are wholly dedicated to vending. So I'm going to take that. That means 20% off my rent, or whatever percentage it is. 20% off my rent, off my utilities, off my insurance, off my car insurance. 20%. That'll be a nice little extra. I mean, that's assuming I make any money this year. I think, and actually I think it used to be anyway, that up to a certain amount it was considered a hobby. And then after you did so much, then it became a business. Check with your tax people on that. Maybe that number's high enough that we won't have to declare it. I don't know. But I wanted to come on and just tell you rather quickly about your income taxes. Make sure you keep every receipt. Even if you pay in cash, try to get somebody to sign a receipt or something saying that you paid them in cash for a machine. I mean, if it's too late and you don't, have a receipt, then I think every used machine has a viable default value. I mean, a used triple head run around 80 to 100 bucks. I mean, we all know that. So if you're figuring cost and you don't have receipt, just put $80 to $100 on it, and I think you'll be fine. Again, I'm not a tax person. You need to check with your tax people, but I'm pretty sure that's the law. But yeah, be very, very careful, because once I know a guy here in town, he's got about 200 machines. He makes around, and I don't know for sure, he makes around $4,000 a month. That's substantial. That's a guy that the IRS needs to hear from, and he needs to pay. Now, can they prove how much you're making on those machines? No. Can they prove how many machines you have? Not unless you tell them. And that's why one-man machine or one-man companies are usually all right. I mean, you can only physically do so much, so it's not like you're robbing them blind. But when you've got 3, 4, 5 employees plus yourself, and they're all doing okay, people are going to start wondering what kind of money you're making, in the IRS specifically. So don't play games. Talk to your tax people. Keep your receipts. And pay your taxes. That's basically all I wanted to say. It's that time of year when we should be doing our taxes, and I had just got back from getting mine done, and they decided not to, because I've only got like 10 machines. And so they said, and you didn't start till late in the year and whatever reason. So, but next year is going to be a different story. So I just wanted to pass that on so you're not caught, especially your first year, so you're not caught unaware and you don't have receipts, and therefore you can't take any deductions from your house or your apartment and the machines and the candy, because we are expense heavy, and a lot of it we do in cash, so you need to keep good records. So good luck and good vending, and I'll see you in the next video.